So as we mentioned, we're very fortunate that we're able to work with the Aion and its Aion token to build out the prototype for this product. So the Aion is a public infrastructure that builds on new open applications. The digital asset is called Aion, so we'll be referring to the Aion token. And one of the pieces that we'll come back to is that in November, I believe, Sam, the Aion changed from just a proof of work consensus mechanism to a really interesting and novel combined proof of work and proof of stake alternating consensus mechanism. And as we talk about, especially some of the validation metrics, we'll talk about what did we expect to see in terms of this transition, and has it become apparent in the metrics that have been designed? And I'm actually going to pull up the token price decomposition for the Aion token for the past 90 days. So this is what you see here. As you can see, the Aion token price has ranged between about 8 cents and about 15 cents. The token price is this navy line here. And using the metrics that we've developed, which I mentioned have a whole bunch that's based on the economic literature, it's based on fundamental value drivers, which we can talk about more. We found that most recently, and this is for May 1st, of a token price of about 8 cents for the Aion token, about 5 cents is driven by what we call the consumer component. So these are users who want to buy goods and services, who are taking the token and using them to conduct consumer activity. This is based on a metric that we call economic activity, which is kind of like GDP of an economy, right? It's real purchases, it's real economic activity. The staking component and the staking rewards are slightly less than a cent of the 8 cent price. And the speculation component, or so the expectations component, is a little over 2 cents, right? And so what you see here, which is great for the Aion, is that speculation is a non-trivial part of the token price, but it's not the fundamental driver, right? The fundamental drivers of the token price are real drivers of economic activity. They're the staking rewards, they're the need to buy goods and services, which is really, really exciting to see sort of robust activity. And one of the things that this allows the platform management to do is to understand, if they do want to think about how do you manage your token price, there's already a significant consumer component. Can you raise that? If you were to increase staking rewards, what would that do? It really starts to give the team an understanding of the levers driving the token price, so then they can be actively managed. So Sam, I'm happy to hear some of your thoughts on this.
Definitely. Yeah, like overall, this graph is just such a great high-level overview of what are the components of token price, and for a project like Aion, it's really valuable for us to have this view so that we can understand what are the drivers, and then what are the strategies that we're putting in place and our community is putting in place, and tracking that impact on these components. So for me, top of mind when I look at this is it's great to see that we have a fundamental kind of strong value over time of consumer components based on the current activity on the network. And for us moving forward, as we build out our product Moves, that is a consumer product, it's going to be really powerful to have this tool so that we can understand how the components that we're building on the network and how they're interacting with the consumers actually translate into value in the asset. So over time, we can start to see when we have particular launches, for example, let's say of a peer-to-peer lending mechanism in the future, what impact could that have on the consumer component of price? And I think when we look at that and we have the speculative component, what's helpful for us to look at is if there was an event and there was a new component, let's say, that drove consumer activity and we saw a significant uptake, what happened to the speculative component in response to that? And what is the relationship between consumer value drivers and speculative value drivers? Because I think that we can start to understand how our communication as an organization is performing. So what I mean by that is if you have lagging speculative components, i.e. people are not understanding the new consumer activity that is happening. That might mean that we have kind of an information asymmetry problem as an organization, and we need to spend better time educating the world around us of what are we building and what are the value drivers and what consumer activity is happening on the network. So this allows us from a high level perspective to understand the performance of those consumer components and then how speculative activity relates to those. The other thing that's kind of top of mind for me as I look through this is really monitoring speculation in isolation as well, because if we're starting to see speculation kind of grow without fundamental value drivers from consumer activity, that can raise potential concerns around the volatility of the price. So if we're starting to see significant uptakes in speculation where more and more people are kind of routinely trading on exchanges, that can result in increased volatility to the asset. And that not in its own might be a problem, but when we look at the impact that price has to consumer activity, it can be. So if users of a particular product are relying on the value of Aion for some type of denomination for a good or service, and the value of that base currency is highly volatile, that could potentially challenge the fundamental kind of business model of that product. Or for the operators on our network, the validators and the miners, they have particular costs to running their operations. And if there's significant volatility and they have kind of CapEx expenses over a long period of time, that can also break their economics. So this view really provides us a quick snapshot of, okay, what are the major drivers to value? And then how are our strategies performing? And can give us insights into, do we need to spend time potentially speaking with some of the operators on our network to understand how this volatility is impacting them? Or do we need to do a better job communicating because we've seen great consumer growth, but it's not translating potentially into speculative growth? So those are the things that are top of mind for me looking at this.
No, it makes a lot of sense. And I think one thing that you've mentioned that I agree is that especially for a project where you guys are aware of what are the different apps running on your network, it's much easier to take active steps to understand and regulate, to grow consumer activity or whatever it is. If the fundamental driver of your token price is speculation, there's less that you guys can do, especially if you want the token prices you're saying to be relatively stable. And that's a target that a lot of projects we talk to have. If you're launching something that's meant to be used basically as a currency or a means of payment, people typically don't really like highly volatile currencies. They're just not attractive. And so, you can get sort of more of a handle on your ecosystem if your token value is really, consumer driven.
Yeah, and just to add to that, Stephanie, just speaking from the perspective of an investor in Aion, the fact that usage is the largest driver here is really encouraging as a venture investor. As venture investors, we're long-term holders, so we're driven much more by the fundamentals of a project than we are by the short-term volatility of a token. And so our gains as investors will come from fundamental growth of the platform over time, as opposed to capturing short-term swings through a shorter holding period. So all that is to say, it's really encouraging to see that the driver of Aion price is from real consumer usage and not just from speculation or from staking. And this is consistent with what you'd expect in a traditional equity investment in a non-blockchain company, right? Like usage, traction should be the long-term drivers of value accrual to the equity, to the token, much like how traction and revenue growth are the drivers of value accrual to equity in a non-blockchain company. And I guess one other question, not as much of a statement, but a question that occurs to me from this is, it's interesting to think through what the security ramifications might be to how much staking is driving the price. Like for instance, if staking is a much weaker driver than speculation, does this mean that speculators have a disproportionate influence on the economic security of the network because they affect the token price so much and therefore the value of the amount of stake locked up? Obviously some speculation is healthy in any token economy, but at what point does it become a security risk?
Yeah, no, I think that's a really great question. Another thing that I think comes up, and you alluded to it with the staking driver, is that there are some projects we've seen that in an effort to get their token price up, they implement staking rewards. And it can either be part of consensus or it can be some kind of sort of interest payment to users for locking up your tokens. And I think what this highlights is that can benefit your token price, but it can't be the only thing driving your token price. You really do need to see this healthy consumer demand piece, or if you had a different design of tokens, or there needs to be more than just staking rewards in order to drive your token. Because you do see here that the staking returns for Aion do add about $0.01 to the token price, but they're by no means sort of the entire value. And so,
yeah, I think that was definitely top of mind for us when we even did our work together last summer when we were designing kind of the reward structure. And it's nice to see it kind of presented here, which is that, yeah, you could definitely increase the total rewards given, but it has a cost. It's not just something that you can just continue to print out. And eventually the amount of new supply that's going to be hitting kind of the market because of that is going to have a negative impact on price. So I think it's important to find that balance of, first of all, you need fundamental consumer activity that's actually driving demand into the system. And then you need to, I think, set objectives for the security of the network. And that was top of mind for us when designing the reward structure was, what are our needs for security based on the usage of the network? And then let's design the economics to meet those objectives, and make sure that we're always kind of growing consumer demand kind of in parallel to that, so that we're not in a place where that we're subsidizing the security of a massive network without any actual consumer activity to secure, if you can think about it that way. So